Hi everybody, how are you doing today? I hope the markets are moving as per your expectation and as per what you have been analyzing the markets, and I hope I've made a difference to the way you think, because the way you think and how you think is more important than what you think. This is the first rule of behavioral science, because we traders are brain warriors and we win with our minds and ideas. In this video, I am touching upon a basic tenet of market bubbles, asset bubbles, and how at the top or approaching the top, there are invariably undeniable signs of excess in the markets. As I record this video today on Thursday, hopefully it will be uploaded on Friday, there are two things that caught my attention. One on individuals and two on institutions. Now, for the institutions, we already know that Archegos Capital is in trouble, and Bill Wang has already been touted to book losses exceeding 110 billion US dollars. Now, I don't believe this is the final figure. I don't believe Credit Suisse or Nomura Securities have basically given you ultimate figure of how much they are writing off. As a matter of fact, 3 days ago, Credit Suisse offered another block of reportedly close to $2 billion of shares to recover even more money that Archegos Capital owed it. Now, this is very simply the game plan every time there is a financial scandal or a crisis in the markets. If you go back in time, right from the Harshad Mehta scam, the LTCM scam, Harshad Mehta was 1992, LTCM was 1997, the dot-com scam and the Ketan Parekh scam, year 2000, the global financial crisis, year 2008, which was also a hedge fund crisis. Many hedge funds went up. Just go by what happened. Initially, everybody, the governments, the regulators, and the stock exchanges told you, hey, there is a small problem and it will be contained. It's only later that they admitted that the problem was bigger than what they thought. Audit is going on. We are checking the books of accounts, etc., etc. So typically then they became contagion events. Just when you think Archegos Capital was the final straw that you've actually witnessed in the markets, you are now being told that there is a bad assets or a distressed assets management company called Huarong Asset Management, which is threatening to go under. It's credit default swaps, which means the probability of it defaulting. Now, this is a term you would have heard in the movie The Big Short. Are trading at life highs. Now, this is part one of what I want to discuss in the video. Part two are two individuals. They are very prominent people from the rogues gallery. Number one, the late Bernie Madoff. He died in prison serving a 150-year-old sentence. For people of my generation, Bernie Madoff is somebody who will not leave your mind space. He's a guy who ran a hedge fund and created the largest Ponzi scheme and a scam in the world. He gave above normal, stupendous returns quarter after quarter in payouts to people. It was nothing but a multi-level marketing scheme where he would take money from new entrants and pay to the older guys with a stupendous amount of profits till the bubble became bigger and bigger. His modus operandi was twofold. Number one, he said, I have a very complex options trading secret which I will not reveal to you. Number two, when you went and threw money at him, hey Bernie, take 50 million from me, he would tell you, my fund is closed, we are not accepting any new guys. It was only after you begged and pleaded with him that he would tell you, okay, just because I like you, instead of 50 million, I'm going to take only $20 million from you. Guess what? The guys who were giving him money actually felt as if they were being obliged that their money was being accepted. till finally the bubble burst. Now, Bernie left Earth 2 days ago. Similarly, I'm reading events about how a 33-year-old swashbuckling trader in Singapore has been caught on 4 counts of fraud. Now, this reminds me of another young yuppie trader of the time around which there was another scam, a big market scam. If you Google search his name is Nick Leeson. A movie called Rogue Trader has been made on him. Students of financial history in the markets will be blessed that they will not get caught at the peak of an asset bubble if they learn lessons from history. This is not just a video about an old man rambling, like one of the guys, one of the viewers commented, "Why do you ramble?" This is not a ramble. This is for you to learn. If you think it's a ramble, feel free to log out. It's that simple. So, this guy, the Singapore guy, UZ, has amassed more than, at this point in time, more than $8 to $10 million Singapore dollars in wealth. Disproportionate assets and collaterals worth 100 million have been seized by the regulators. Amongst other things, if you know Singapore, you will realize that living space is extremely expensive there. He was living in a 3-story villa in Singapore for a small island nation city. That's steep. $5 million worth of cars, each car, right? Now this guy collected $1 billion from a rich set of clients based on commodity trades that were non-existent, and he was promising 15% profit every quarter. And what? People were raining money on him. So at some point in time, he ran out of ideas. He started collecting new money, started paying money to the older guys. Remember Bernie Madoff. But at some point in time, the chakkar has to stop spinning. Why am I telling you about Huarong Capital, Archigo Capital, Huarong Asset Management, Archigo Capital, Bernie Madoff, and UZ? Why am I telling you about Nick Leeson? Why am I telling you about Mr. 10%, the guy who manipulated copper prices, the Japanese trader who manipulated copper prices? Why am I telling you about the SRB trader who was indicted in 2005 for manipulating prices of copper on the Chinese commodity exchange? Does this all ring a bell? This has all happened during the phase of inflation of asset bubbles. If you read Calverley's book, How Bubbles Burst, you will realize that there are palpable signs the markets are telling you that excesses are being committed. People are taking shortcuts. They are either over-leveraging themselves, and Bill Wong of Archigo's Capital was actually reportedly, now here again, because his trades are masked as swaps under various banks and friendly, obliging brokerage firms, we'll not know the exact exposure now. But there are reports that he was leveraged, hold your breath, up to 500 times. So you have $1, you're taking bets of $500. All right. Now, what does that tell you? Just a 0.25% or a 0.5% decline in the assets that you have bought will wipe you out. That's your margin of error. Now, these are guys who will go first. Number 2, Ponzi schemes like UZ, Bernie Madoff, Nick Leeson, etc., will also go. Typically, these are the small fries. These are actually the small fries. Even though Bernie Madoff was running the world's largest Ponzi scheme, it was tiny compared to the decline that occurred after the dot-com bust. Which means that a whole lot of people have taken shortcuts, which is human nature. And the more you find such red flags being raised, the more you will feel that you're closer to a point where the market will stop rising, pause for breath, reassess itself, and realize that there were some scandals, jhol, jugaad, shortcuts, setting, fitting, call it what you want in different languages, different slang terminologies. You will realize that shortcuts were being used to propel market prices higher. Let us not forget the name of Henry Blodgett, the dot-com Pied Piper, who used to come on prominent television channels in the dot-com era of 2000 and talk dot-com stock price is up. Whenever he came on TV and recommended a dot-com stock, the stock used to go up by 5, 10 and 20 times, not percent. And he would go back to office and brag to his colleagues as to how stupid people were to listen to all that bullshit advice. So this also happens. Henry Blodgett, if you Google search him, has been debarred for life by the Securities and Exchange Commission from giving stock advice ever. These are very strange times, and you need to exercise abundant caution. It does not mean that you sell your portfolio tomorrow morning. These were signs that were coming out from the markets a minimum of 12, if not 15 months before the bubble popped. So nothing's happening tomorrow morning. But for serious investors who are thinking of pumping money now for the fear of missing out, FOMO, I think this is time for a rethink. You need to be extremely careful. For my friends who are looking at 8, 10, 12, 15-year long-term view on building portfolios, you have absolutely nothing to worry. The long-term trend remains up. We remain bullish over the longer period, but there would be some quarters of declines. We don't know when. I've never said I have a magic wand when. But if these signs are any indications, I think the market is actually giving out sirens of alert that you should be very careful in where you are putting your money. Plan ahead and let's be careful out there. Plan ahead, let's be careful out there and deploy your money as safely as possible. On this cautious note, this is Vijay Bambwani signing off for now, not before reminding you to click like on my video if you agree with what you saw. Click on the bell icon to receive instant alerts about fresh content being put up out here. In the comment section, do let me know what you think about this video and help me reach out to fellow like-minded traders by referring my video to your family and friends. I hope you have a very, very profitable day ahead. Vijay Bambwani signing off for now. Thank you for watching. Take care. Bye-bye.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.